Hi friends, very good evening all of you. Welcome back to CAP classes. Today, let us see one very interesting question from marginal costing. This is our illustration 17 from ICI study material. It is actually a simple question, not anything complicated except one small working notes. But because these problems in marginal costing are unique, in a different way. So if you look at different problems, basics and all, when you're calculating contribution ratio, PV ratio, margin of safety, break-even point and all, they are, they belong to one league. When you bucketize the remaining problems, when you go into advanced level, which is called, not advanced, which is called decision making, then each and every problem is completely different from the other. If you look at problem number 13, 14, 15, what we have done, make or buy decision is there, outsourcing decisions will be there. Something similar to that, even in question number 17, there is an element of decision making. Okay, let us see what it is. And this is an important model. You can expect this kind of models in the exam. Okay, the profit for the year of RJ Limited works out to 12.5% of the capital employed. Underline, they are saying their present profit is 12.5% of capital employed. If capital employed is given as 10 lakhs, for example, on 10 lakhs, you need to apply 12.5, then you will get 10 lakhs into 12.5, 1,25,000, for example. And the relevant figures are as under. So the existing sales, they have given 5 lakhs, direct materials, which is variable, 2,50,000, direct labor, which is also variable, 1 lakh, variable overheads, obviously variable, 40,000, and capital employed is 4 lakhs. So can you take your calculator and tell me what is the amount of profit? Simple, capital employed 4 lakhs. On that profit rate is 12.5. So 4 lakhs into 12.5%. How much it is? It should be 50,000. Yes, 50,000. Now, fixed overheads are not given in the question. Do you think there are no fixed costs, fixed overheads? There are fixed overheads. You need to calculate them. How do we calculate? Sales figure is given. If you subtract direct material, direct labor, variable overheads, you will get contribution. Contribution minus fixed cost is profit. Fixed cost is not there, but profit is there, no? That 4 lakhs into 12.5. So fixed cost will be balancing figure. Like that, we need to calculate fixed cost. Now, chalo, let us calculate fixed cost first. So we'll put the heading. This is nothing but marginal costing income statement. Marginal cost income statement. This is called income statement as per marginal costing technique. Particulars, present situation, sales is given 5 lakhs, less variable cost. Under that, they have given direct material 2,50,000, then direct labor 1 lakh, direct labor 1 lakh, then variable overheads 40,000. So total variable cost, so is equal to sum of these three you can add. Therefore, contribution, sales minus total variable cost. So 5 lakhs minus 390,000, 3,90,000, that gives you 1,10,000. Then less fixed cost. Okay. So reverse working. Then you will get profit. So profit is already given. How we calculated profit? 4 lakhs capital employed into 12.5%. Present profit is 4 lakhs into 12.5%. That gives you 50,000. Correct? So fixed cost is 1,10,000 minus 50,000, which is 60,000. So this is the present situation. This is how fixed cost is to be calculated. Then in the last paragraph, they are saying something. Let us see what it is. The new sales manager, that means they have taken a new sales manager who has joined the company recently. So must be very enthusiastic and energetic. He'll bring so many proposals. Some of them will be valuable proposals. Some of them will be shitty proposals because he joined newly, no? He'll try to prove something. Let us see what he says. Who joined the company recently estimates for the next year a profit about 23% of capital employed. Oh my gosh. So the present capital employed is 4 lakhs. On that, present profit rate is 12.5. He is telling that he will make it up to 23% of capital employed, provided volume of sales is increased by 10%. What is volume of sales? Means number of units sold. That is increased by 10%. And simultaneously, there is an increase in selling price of 4%. So increase the volume of sales by 10%, increase the selling price by 4%, and on overall cost reduction in all the elements of cost by 2%. So he is telling three things will happen. What? One, quantity, number of units sold will increase by 10%. Two, selling price will increase by 4%. Three, costs will come down by 2%. All the elements of costs. So even fixed cost will come down, because they said all the elements of cost will come down by 2%. Then if all these three things are simultaneously done, will it achieve 23% is the question. He is claiming it. We need to prove it with evidence. Required. Find out by computing in detail the cost and profit for the next year, whether the proposal of sales manager can be adopted. We'll see. So this is present. They have done one more column with proposed 10% increase. This they have done. And then they have done proposed 10% up and 4% up in selling price and 2% down, less than cost. So if all these things are satisfied, then what will happen? Actually, in my personal opinion, this column is not required, but they have solved it in the answer ICI material. So ICI material is like our Gita, Quran, Bible. So we have to follow it. So I'm giving you this column also, but even skipping this column, you'll be able to achieve the last column. Now, if sales, the quantity, if it increases by 10%, what will happen? 5 lakhs will become 5,50,000. So this into 1.1, add 10%, 5,50,000. Because number of units sold increased. Remember one very important rule here. Very important rule here. Selling price increased. Direct material will not increase from 2,50,000 up. But if quantity, volume increases, this will increase. Okay. Now, this is a very important rule. If selling price increases, variable cost will not increase. But if sales volume increases, variable cost will also increase, because you are producing more number of units now. If selling price increases, you are not increasing the quantity of production. Why variable cost will increase? So this you need to understand. So many students will do this wrong in the exam also. So because here sales volume increase, all the costs also will increase. So this is 10%. I'm applying same 10% for all the three. So 2,50,000 will become 2,75,000 plus 10%. 1 lakh will become 1,10,000 plus 10%. 40,000 will become 44,000. So total variable cost, I applied same formula. Contribution now is 121,000, 1,21,000. Okay. Fixed cost remains same 60,000. Fixed cost remains same 60,000. In the last column, we will reduce fixed cost also by 2%, because in this column, we are using only 10% increase. We are not considering 2% decrease in cost. Cost reduction we are doing in last column. So here profit would be no, this minus this 61,000. Okay. Now let us see here. In the proposal, what is happening? This 5 lakhs volume will be increased by 10%. So plus 10%. Selling price will increase by 4%. So plus 4%. So here this into 1.1, which means 10% up. into 1.04, 5,72,000. Or if you have calculator, I have Excel, I can do any nonsense here. If you have calculator, take 5 lakhs plus 10% plus 4%. Okay, now here, what am I supposed to do? Reduce it by 2%. So take this into, I am taking 0.98. Or if you have calculator, what will you do? 2,75,000 minus 2%. So apply this for all the costs. Okay, then total variable cost, add the three numbers, contribution, sales minus variable cost, profit is contribution minus fixed cost, same. Okay, now here the catch is some students will get a doubt. Pavan sir, why fixed cost will come down? So some people will say here I'll not write 58,800, I'll put 60,000. Makes sense. Makes sense. But in the question they said all the elements of cost will be reduced by 2% in cost reduction scheme proposed by the new manager. That is the reason we are reducing this also. Okay. So profit is 92,780. Now let us calculate profit as a percentage of capital employed. They have given capital employed 4 lakhs. So 92,780 divided by 4 lakhs. Calculate percentage into 100. This divided by 4 lakhs, that is giving us 23.2%. Okay, so he said profit will increase to 23% of capital employed, and he is right. So whether this proposal can be implemented, it can happily be implemented because he is telling three things. All of them are positive actually. Increase the quantity of, sales volume, very good. Increase the selling price, very good. If you can increase the quantity and simultaneously increase selling price, you are a very good marketing manager. Go ahead. Normally price elasticity will be there. No, if you increase price, volume will fall. But he is telling, I am confident I'll do both. Okay, do both. This cost reduction scheme also. So it is 92,780. Here they go 92,780. And then it is 23.19% or 23%. That's it. That is the answer. Therefore, the proposal of sales manager can be implemented. That is the answer for this. You understand? Any doubts in this?